Hey, thanks everyone for tuning in. This is Going Elliptic and another installment in our Charted series for 15th of April. Hey, Shanky.
Hey Paul, how are you doing?
Yeah, pretty good, thanks. Definitely a busy day watching a lot of charts today. It's been quite an interesting market dynamic. How about you?
Absolutely, likewise. There's just been so much activity all around. There is certainly the sort of a little bit of movement on BTC, as we've all seen after all the lull and all sort of stalling it around 60K. And there is plenty of price action in the alts, so lots going on for sure.
Yeah, it's nice to kind of take this point of time to snapshot and actually look at that market activity. And I know in a lot of the previous shows we've covered a range of assets, but today we're going to do it a bit differently and go deeper on just one asset, which is, tell us, Shanky.
It's BTC, the king of all, as I think one of our guests said,
Nice.
right? Very
Yeah,
good.
yeah. BTC VIX obviously also had a few other opinions there around BNB potentially flipping ETH and a few things, but no, Bitcoin is still reigning supreme. So yeah, it'll be interesting. And why don't we start with the just general market activity, looking at the charts before moving on to some valuation models?
Let's do that. Yeah, so let's bring that up and start with the BTC charts. Okay, so well, first thing, Paul, the exciting conversation that was happening all around was when and how would BTC break 60K, right? So we saw a few attempts, right? We got the first attempt almost sort of getting close enough to 60K right here around, late Feb. Didn't quite make it, and then we saw a huge retracement from there. Market went back up, and we saw a whole bunch of parabolic moves here. A lot of good greens building up to a nice good 60K, and it was looking like it'll go through this roof. But it went back a second time. Of course, it didn't dip all that far back as the first time, so you could claim it was kind of a higher low, and then from there it went back up, tested a third time, but couldn't quite hold it. As soon as it touched 60K, it was back again. So a lot of suspense was building, right? That was something that people have been watching. It's been
Sure.
almost 2 months, right? So people are thinking, what's going to happen to BTC? Is going to keep going up as we expect it to go? Sort of the the up only school of thought, or is it going to crash and burn, or is it going to just stall, right? So I think there was certainly a lot of anxiety, a lot of speculation around what's going to happen around the 60K, and I think that was really on a lot of people's minds. And more recently, yesterday, in fact, is when that at least got answered to the extent that the price did break through 60K. It doesn't mean that it has broken through confidently, because we also saw a red after that. And, even today, as the market is opened, we are seeing the price sort of still around that range, a little over 60K, in about 63K range. But, not necessarily seeing the big moves yet, right? So I think the suspense that is still on, but certainly a little more resolved than it was last week.
Yeah, and I've been seeing a lot of narrative around obviously the Coinbase IPO potentially bringing in attention to Bitcoin and perhaps being one of the reasons why we're seeing this break above 60K this week. Do you buy into that theory, or it's just a coincidence?
I think there might be something there. Well, there are two things. Firstly, the Coinbase itself, the coin IPO, went through a massive volatile movement on day one. Was supposed to open at 250. That's where I think the price was set. Went up all the way, I believe, closer to 350, and then sort of came all the way down, back down to closer to 300, 310 or 315 or something in that range, and then recovered a little bit. So it was in some sense showing that flavor of volatility that Bitcoin itself shows.
Sure.
Right? But I think the market is big. And the way I look at Coinbase is that I think Coinbase is really, in some sense, the brand ambassador for Bitcoin and for crypto at large, to a segment that is more institutional, to a segment that is more traditional, right? The more sort of traditional finance. So it's possible that it might generate some more interest among the, the traditional asset managers and traditional finance companies, where they might start looking at the Coinbase valuation, right, on the markets and say, well, let's figure out why these valuations are so bullish, and what else can we invest in. And then obviously the next thing would be, well, why not invest in Bitcoin itself? Because if you really look at Coinbase's valuation, it's a function of the bullish market. I mean, they projected a huge amount of profit and all the success story, but what people have forgotten is that during the bearish markets, Coinbase also saw a substantial decrease in volume, and also saw a decrease in activity, right? But of course, it's the current bull run and the whole sort of Bitcoin upsurge that it has timed really well. So yes, I think the short answer is that it will certainly get attention on Bitcoin for sure. The Coinbase effect will happen.
Nice. And I guess also one of the other interesting things was, even though Bitcoin's breaking over kind of 60K, there are a few points there where it seemed like Ethereum was shooting higher, at least having higher gains, and a slight divergence earlier today. It's quite chaotic just seeing those things in the market. It's not our normal patterns that we'd see, and it's a more seasoned trader than I. Are you sensing that those irregular patterns are just the market trying to find the direction it wants to go, or is there something else we can do to understand that or make sense of it?
Yeah, that's a good one, actually. That's a good question and a good way to sort of understand the market. If you start looking at the broader crypto market, it really started with Bitcoin, as it usually happens. It's the front runner, and the market started going parabolic starting late last winters, perhaps around November, December timeframe. And then as we came into the new year, it came with full energy, full force, and we saw a lot of good upswing price actions throughout the good part of this year until now, right? And then sometime in March, I think, as it has happened in the previous bull runs, the attention started going towards the alts. Now, ETH was seeing price action anyway, even prior to that. I don't think ETH suddenly got picked up in March. I mean, the ETH was already also on its upsurge, but I think there was sort of relative more interest in Bitcoin as compared to Ethereum. But that flipped. So we did see a period where ETH became the sort of primary instrument. And I think we can look at the ETH to BTC. That might be a good one to quickly look at. So, this is the ETH to BTC chart. And if you look at this, as I was mentioning, just now, is that this is basically ETH to BTC. We did see ETH sort of, rise quite rapidly, and then beginning of the year, as compared to BTC, ETH is actually bearish, right? So if you see this whole period from beginning of Feb to beginning of March, that entire month, it just looks like BTC is dominating the market, and relatively speaking, ETH is not that important, right? So which also perhaps means that people are shifting capital and strategies in favor of BTC as opposed to ETH, right? So like they're probably selling ETH and going more and more towards Bitcoin, because Bitcoin in the same period is surging up, right? So this is where the price of Bitcoin is going up. And then we see the story flip here, right? So there's, of course, a period where there is a little bit of indecision, and both of them are sort of head to head, where the relative difference is almost, sort of stabilized, very small candles if you look at it, right? Like very little divergences through the period, and then ETH takes off again. So, if you start looking at this period from end of March, it certainly looks like ETH is the stronger one, or relatively stronger one, as compared to BTC, right? So there's definitely a part of that. There's certainly a play because of ETH's prominence that Bitcoin price is stalling, and I would say it's even beyond ETH, right? You just mentioned, for example, a last guest spoke about the bullishness of BNB, and not just BNB, but a whole bunch of different tokens are seeing a lot of positive price action. So perhaps it's the same money that is going in other tokens, which are possibly giving even more returns, right? Higher multiples and higher returns, as opposed to people sticking with the king, right, with BTC. So that sort of portfolio shift, if you may, is certainly happening. That there is no two ways on that. Yeah, that's I think a valid argument and a good way to kind of look at it.
Great. So yeah, from a market action perspective, obviously it's looking like we're going to see an upward trend. Do we want to maybe talk a little bit about ways to value that trend, and then chart what that could mean in terms of where we see Bitcoin going in the coming weeks?
Yeah, I think so. I think it's always good to go back to a few popular ways that people have been assessing the value of Bitcoin, just so that at least there is a reference point, right? Whether one agrees with the model or not is a second criteria, is a secondary factor, but at least keep that in perspective. And then once we look at it and kind of understand it and be on that same page, we can come back and look at these charts and look at some of the other technical indicators to see, how true are we to those models? Are we close enough? Are we far away? Are we getting there? So that certainly makes sense for sure. Yeah. So in terms of valuation models, there are quite a few, honestly, that have come up over the last few years. But there are a couple of them that have become incredibly popular. The one that everyone loves to talk about is really the stock to flow model, right? So,
yep,
right.
I mean, a lot.
Exactly. Yeah, stock to flow is perhaps the most commonly known or the most commonly discussed. It is also very common because it sort of gels well with the current narrative of Bitcoin, right? So if you start looking at the current narrative of Bitcoin, it's really firmly established as a store of value, right? So people aren't talking about Bitcoin as a peer-to-peer transaction anymore, or a payments infrastructure, or so much in terms of easy digital money. None of those sort of conversations are most powerful, but what has really been prominent over the last couple of years and just getting more and more momentum is around, hey, is this a hedge against the sort of monetary inflation? Is this a good store of value, right? The same way that people look at gold, or people look at any other precious metal, right? Platinum or silver or anything else. And so this valuation model is really based on that valuation model, right? So if you start looking at how do you value gold, right? What should the price of gold be? Traditionally, commodity valuation sort of models or valuation science says, well, let's look at how much is there that's available, right? Like what is the amount that's available, and let's look at what is the new amount that becomes available every year, right? So what is the new that gets added, right? And so what is available at a given point in time is the stock, the total sort of stuff out there, and flow is the delta, right? So year on year, how much new is being produced. And the general school of thought is if it's a precious metal and a lot of it is already mined, well, doing the delta mining, getting additional is like expensive, it's not easy. And so the cost of that is very high, and therefore the flow is always small, right? There is always less of it that's coming into the bigger supply, and the supply is, of course, what it is. And so when you look at the ratio of the overall stock to whatever new is coming, it gives you an indication of what the value should be, right? So that's how sort of gold has been valued, and multiple other, commodities. And so stock to flow kind of takes the same model. And I think Bitcoin kind of falls into it, isn't it? I mean, if you think about it, it's whole sort of gap, right? So.
And I remember, reading a Bitcoin Talk thread in 2011, and that was suggesting that even this kind of curve or valuation model was what inspired Satoshi to kind of have the 21 million and have the halvings to try to approximate a similar curve to, say, gold or precious metal extraction through mining. So it's hard to say whether that's true, but it's definitely been around for almost the entire life of Bitcoin. That was the intent. So yeah, definitely that's given a lot of credence to this stock to flow model, right?
That's correct. Yeah, absolutely. It's been long enough, and the narrative, in fact, is becoming more in favor of this narrative than the alternative narrative. So certainly, this is becoming the predominant model, if you may. Now, if you look at this chart, by the way, this, of course, smoothens the curve out, right? Because the halving or the halvening, as some people like to call it, isn't really, happening exactly at these intervals, but it's sort of taking the average per year, right? And if you look at this chart, what is being done here really is like, you have this price, the real price as it has emerged, right? As it has sort of played out over the years. And then it has plotted the stock to flow underneath that, just to kind of see, hey, how close has the price been to that ratio, stock to flow, right? And of course, we see periods where there is a decent amount of divergence, but for the most part, it has been tracking it, right? Now, of course, during the divergence periods, you could become a skeptic and say, well, this is like too far out than what the model says. And that's a fair, sort of criticism if you were to say that. But if you look at the longer term picture, it does seem to be more or less respecting it, right? So from that standpoint, if you just look at this model, it does seem like, this year we should be seeing a 80K type of a price range, right? Somewhere in that 80,000 Bitcoin price range. And that should not be surprising, assuming you believe in the stock to flow model. Now, of course, the question is, do you believe in the stock to flow model? Well, that's a different question, right? But if you do, then I think the 80K Bitcoin seems reasonable, or seems at least appropriate, right?
Yeah, and it was also interesting. There was a tweet from Pantera back a little over a year ago, and they were trying to predict what the price of Bitcoin would be in each month of the year through to April 2021. And I suspect they've most likely used a stock to flow model. They didn't say, but it was within a few days of their prediction. So I think they had predicted Bitcoin at 6,300 and a little later in April, whereas we got there a few days earlier than they'd predicted. But it's very interesting to see how far back people can have predicted using models like these.
True. Yeah, that's absolutely true. Now, in fact, for people who use TradingView, there is a nice indicator that anyone can use to really see at any given point in time what this stock to flow is saying, right? So
I didn't know that.
yeah,
Cool.
yeah, it's a very, very neat one, very good one. There are actually quite a few. Some of them are also inaccurate, but this is the one that I found, which was really good. So if you look for stock to flow, and if you go to the Bitcoin stock to flow, the one that I like is the one which says corrected for Satoshi. And what this is doing is, if you look at the calculation for this one, it takes out the 1 million that supposedly Satoshi is holding, right? So the theory is it's stock to flow, and assuming that Satoshi is either vanished or is never going to come back in action, it doesn't make sense for anyone to calculate that 1 million in the stock, right? So you take out the 1 million from the stock, and therefore it becomes, like, for example, right now it will be 18.68 million or so, and then minus 1, which is 17.68 million, and you divide that by the flow, and then you get the stock to flow graph. So that's how these guys plot it.
That makes sense. I guess the other thing is obviously some of the Bitcoin forks over the years. That's a different stock, and one could say a different asset, but some have obviously seen different experiments with their flow, the rates that they've been emitting, and it's always hard to say, does that have an effect on the original Bitcoin core chain?
Truly, yeah, of course. I think all of that, the narrative, and then some of these models also sometimes end up becoming self-fulfilling prophecies, for sure. So they definitely play a part. Okay, so this one is apparently predicting we should already be close to 80, like 79 or so today, right? This is what this chart is saying. But for the most part, if you go back in history, it seems to be okay. It seems to be tracking it. Of course, it diverges quite a bit when the price action isn't really commensurate with this expectation. But in a bullish market, it seems to be doing okay, right? It's tracking the price fairly well. So we'll see, how the truth unfolds. But I think one way or the other, the calculation is certainly showing like the 80K Bitcoin is possible, right? Like that is what at least these stock to flow models are saying. Okay. Now, stock to flow is not the only one, of course, right? I mean, you can also look at other models. And one of the other models that is very interesting and that is becoming both popular but at the same time has been contested is what is called the Power-law Corridor model. Okay, and I will talk through a little bit, but I encourage people to go and read this blog post by Cryptokia. It's a really well explained blog post. This author has really done a great job in going through every detail, explaining both the benefits and the flaws, and just laying out all the things that are out there in this model. So I would highly recommend that people go read this blog by Cryptokia, which explains this model. The fundamental idea in this model really is that if you look at the Bitcoin prices, it kind of looks like this, right? This is the story of Bitcoin prices, where the earlier prices are so small compared to what the price action is today. And this, by the way, chart is slightly old. This is from 2019, and we will have, by the way, a similar model that we will work on, Paul, for our newsletter, right? So we're going to include one which is more up to date.
Right.
Yeah, exactly. So we'll see more in terms of even the current price action, how this looks. But the key takeaway here is that it's very hard to understand this price chart because the prices today are orders of magnitude away from what the prices were in the beginning, right? So comparing things when Bitcoin was 5 cents or 50 cents or even $1 or $5 to where it is today is a very difficult job, right? It really doesn't tell the story cleanly. And so the essence of this model really is that should we be looking at logarithmic scales, right? So instead of just looking at linear price and linear time, why don't we plot this to a logarithmic scale, right? So both logarithmic price first, and then you end up getting a curve like this, which starts telling a story in terms of patterns a little better. And then you also shift the x-axis on a logarithmic curve, and then you start getting something like this, right? So that's the kind of first underlying idea here, that let's think in log terms. Don't think in linear terms. Let's think logs. Okay. And then what it does is that it takes these log plots and says, can we apply the idea of linear regression and do some curve fitting on these log plots? So it really looks at something like this and says, hey, if this is a log plot, and if we were to do a curve fitting, which essentially joins all the peaks and all the troughs, all the bottoms on all the highs, what do we get, right? Do we get boundary? Do we get basically a range in which Bitcoin price moves, right? And then using these log plots, can we go back to linear plots and see what the price should be? So that's the kind of line of thinking out here in this particular model. Now, this particular model, by the way, has been debated quite a bit also. Some statisticians have come out and said, well, there is some statistical inaccuracy here because you're using the method of least squares, and that doesn't apply in some of these scales. And while, there some of those, things that have been brought up are true, the idea is it's an interesting way to look at it nonetheless, right? Just like you could go and argue against any model and pinpoint and see whether it's accurate or not. I think certainly this has its flaws as well. But having said that, I think it is still very powerful. It's a good way to kind of look at the price and sort of study and understand it, right? So I think it's still very relevant. It's still very good in my opinion. At least it's another viewpoint. And so as you dig deeper, again, we will not obviously go in through all these details, right? We'll cover a lot of this in the newsletter. So I think the listeners and readers will have a chance to dig into the details. But the idea here really is that once you plot this curve out, it becomes like a log growth model. And then you start looking at these sort of price projections, right? And unlike the stock to flow where you get one number, this really gives you the range. It says, hey, this is the channel, right? So this is the kind of what they call the Power-law Corridor or the Power-law channel, and says, well, this could be the least and this could be the maximum in a given period, right? So it sort of creates the bounds, if you may. So for example, it says 2020, it said, well, the price could be, bottom could be 7,900 and it could go as far up as 89, right? And 2021, it said bottom could be 12K and it will go as far up as 133K. And then, of course, this is the trend that they have put, which is the middle line where it might be. So if you really look at this and the last couple of years, it's not that bad. It is sort of giving you that range, which is fairly within reach, or fairly within how the price action has been. So it's an interesting one, nonetheless.
Yeah, and I guess there's less of a breakout from those ranges. It is a wide enough channel that, yes, you might not stick exactly to the trend, but that it would be pretty hard to break out of that channel in either direction in a meaningful way.
That's correct. No, absolutely. That's correct. So yes, it's intentionally a broader channel, right? So you could say the margin of error is like much higher. So you would fit into that, but it's an interesting way, right? It's in some sense gives you the bounds, right? And so I like this as well. And this one also is saying, hey, maximum basically about 133K at this point in time, and that seems sort of appropriate again, right? It seems sort of suitable. Now,
yeah, if you were recalculating that now, would you expect to see a different range for 2021 if you had more 2020 data in there?
I was just recalculating that earlier today. It does seem to be roughly the same, right? It has moved a little bit, but it does seem to be roughly the same. In fact, there is like a formula that comes out of it. Let me dig that out for you here. It's essentially, bear with me, it's a power log function. We will certainly put that in our blog post and we'll study it. Okay, I can't see this right away, but this is the gentleman, by the way, Harold Christopher Berger, who came up with this model. And the power law model, when it was created, I think the idea was that it took the beginning as 2009, right? And so it takes a certain sort of parameter estimation, and then using that parameter estimation, it comes up with a precise curve, if you may, right? So yes, as newer data points come in, it certainly gets impacted, but the curve is sort of fit in with a certain parameters, and then it assumes those parameters are more or less true. So that's also why we don't see much variance, right? Now, I personally feel that you could also argue on the front that should you even be considering prices from 2009, right? Because the alternative viewpoint could be that the market was so thin back in 2009, 10, and I would say even till 2011 or 12, right, where most of the trading was happening either in message boards or peer-to-peer or such small number of participants, that really from an efficient market standpoint, is it even relevant, that data set, right? But well, that's a separate conversation for another day. Right? But
sure.
But nonetheless, it's an interesting model. I kind of like the model because it's another sort of framework that allows you to think through it.
And I guess also it's not just kind of plotting the price. In some ways, it is looking at that demand and maybe perhaps the network effects of the general population progressively discovering Bitcoin or getting Bitcoin for the first time, which itself seems to be perhaps a power law itself, in that each person that has made money in Bitcoin is going to tell so many other people that they should get into Bitcoin as well.
That's correct. No, totally. And that's where it goes back to what you said earlier on, which is like, hey, will the Coinbase IPO have an impact, right? So the Coinbase IPO itself will be a story where people will try and deduce and say, oh, Coinbase became so big, so popular because of Bitcoin, so maybe I should go and get some Bitcoin, right? So there's definitely a bit of, sort of positive effect that will build basis more activity on the network, more awareness, more price action, right? So all of these will drive, in some sense, more energy into the system for sure.
Great. Is there another model that we can look at?
So there are a few other variants, but I think these are the two which are the most popular ones.
Okay.
There are variants of stock to flow, which I think we should cover again in our newsletter, which looks at various parameters within the stock to flow model, and it also looks at optimizations to stock to flow in terms of how we could break it and also look at halving in a slightly different way. And of course, each model parameter change or each slight variation in the model also ends up giving you a new output, right, or a new prediction. So I think there are a few of those, and we should definitely study them. We should certainly put that out, and we will do that in the newsletter. But I think if you just look at it purely from a higher level, big models, I think these are the two that definitely everybody should at least get familiar with, right? Anybody and everybody interested in Bitcoin price action. Now, maybe we can look at the charts themselves. Let's maybe study the charts a little bit more, right? And see what the price action itself is telling us, because the price itself is a story, right? The price at the market itself tells us, right? So,
yeah, definitely. And before we jump in too much more, don't forget to follow us on Twitter at Going Elliptic, or subscribe to the newsletter at goingelliptic.com. And yeah, as Shanki's alluded to there, we will be doing a even deeper analysis following today's call and putting that out on the newsletter. So subscribe so you don't miss out.
Yeah, certainly. And also like, subscribe, right? Like in this channel. If you like the content, let us know. And if you want to see more of this or some other stuff, let us know about that as well. We'll be happy to cover those. So let's jump as a last bit here, the price action, the more recent price action. I would start with perhaps looking at some of these, volatility channels or momentum channels. And maybe a good one to look at would be Bollinger Bands. And one more reason I want to pick up Bollinger Bands is because John Bollinger himself seemed to have been watching this very closely. It seems like he was tweeting and talking about Bitcoin price action and how the Bollinger Band was doing in predicting the BTC price action. So
yeah, and also some interesting commentary from him on the exact parameters to use, since obviously Bitcoin is traded 24/7 on a non-stop market. So yeah, different parameters than you might have otherwise used on the standard stock market.
Yeah, 100%. Yeah, exactly. So normally in a normal stock market, the Bollinger Band, let me put it to default so maybe we can look at it. Also take out these EMAs so it's cleaner and easy to see. So, a Bollinger Band essentially tracks the moving average over a period of time, or the average, and then a couple of standard deviations away from that average to see how the price is moving. What's the momentum of the price action. And in this particular case, usually the length or the period or the interval is 20, because, and of course, right now we are studying the day charts, the day level time frame. And 20 makes perfect sense because, in a normal market, the markets are shut on the weekend. So in a typical month, you have about 20 trading days, right? So when you look at 20, it essentially gives you a monthly picture, right? Or every calculation is a month full, or worth a month. But where the markets are 24/7 and every day, right, round the clock, I think this number probably needs some tuning. And I think this is what John Bollinger was referring to, right? As you rightly mentioned, Paul, that, hey, how about looking at it something like 28? Now, it's interesting that he came up with his number, because in our previous charted series, we had been talking about it being 28 for the same reason. So we are glad that, we came up with something that an expert like John Bollinger also seems that it's a valid and a good idea.
Yeah, it's very cool.
Yeah, so if you look at this chart, we don't see any squeeze yet. We obviously see white bars here, the big balloons here showing a lot of volatility. It did seem like it was, the squeeze was coming in around here. Usually when the Bollinger Bands go through a period of squeeze, now of course the squeeze doesn't look like this. It's really like a tight squeeze, where the candles start becoming really short, and essentially it's a period of either accumulation or distribution. And then of course, as it happens in the market, that also means the market is getting ready for a big, sort of a big move, right? Either a big move upwards or a big breakout downwards, one way or the other. And I think there was a little bit of conversation online whether a lot of this, what is happening in terms of the price action, since it's stalled around the 60K price range, is this really resembling more of a squeeze, right? So we don't think so at the moment. It's not really a perfect squeeze, so to speak, in the sense of a Bollinger Band squeeze, but certainly the volatility had decreased. And we also saw, of course, the 60K acting as a very powerful resistance, but at the moment, more recently, that has been broken. The big question, of course, to look at is like, will it hold? Will it continue its march upwards, or is it going to retest and come back down and start looking at some of the price points before it continues its journey upwards? So I think that's really one thing to look at. Let's look at a couple of other indicators very quickly. I would say let's look at RSI maybe to see what does it mean in terms of overall sort of buying behavior. I think it's okay. It's within range. We don't see in the last multiple weeks actually any kind of an overbought or a oversold scenario. Now, oversold, of course, is unlikely to happen in such a bull run, but we're not seeing any of this that we saw back in January, right? There were so many long periods of overbought periods, but right now it does seem like it's not getting into that territory. So it's probably still trying to figure out what the right price is. And one more we can look at is just the average to range to see how much are we moving here. So if we look at average to range, well, that's a good bit of movement, right? So in a 14-day RMA, we are still looking at about $2,700 worth of movement daily, right? And this is interesting because the $2,700 worth of movement is still quite a bit. Of course, the base has become 60K, so it's not humongous, but it's still quite a bit. But if you look at these candles more recently, we saw much smaller candles, right? We saw from 57K to 56K, so barely like 1K, and here it was even less. This was probably $500 worth of movement. 59,084 to 58,234, right? So we did see a period where the volatility really died out, and then of course days of doji here, right? We can zoom in a little bit. This is like the classic sort of two-legged doji, and one day was green, one day was red, but this is really just a complete indecision, very little movement of price, right? The buyers and sellers both were sort of stalled here, and then we saw very little small bars for a while. But this number, the overall number of 14 days still showing 2,731, is perhaps because of these few days where we saw a lot of big candles, right? A big green candle here back in March, a few big reds, which brought the price back down. And then again, some of the more recent price action, which is big green here on 13th, which helped break through the 60K barrier. So yeah, that's interesting to observe. So I think this is something we need to keep an eye on. We need to look at the volatility, and we need to look at where does it go next, right? In terms of, do buyers take control and keep pushing it up again? Do sellers come in, and do we start seeing some more correction? Or do we keep seeing this sort of sideways market for much longer?
Yeah, and I think if the average true range did continue to decrease, my understanding from what you've explained there is that that would be more of a stabilization of the price if it continued to decrease the range that it's trading in.
That's right. I mean, I think the way to read that would be that we are not seeing either side really coming in with a strong conviction, right? So sellers are not coming in and saying, hey, we need to start sort of bringing it back down or retracing our shorting. And buyers are still not so enthused that they would come and say, well, we want to take Bitcoin to 80K or 100K or whatever, right? Like they are also lacking conviction effectively, right? So in some sense, there's a stalemate. And I think the smaller candles we see, we just see more and more of that stalemate. And perhaps it'll get resolved once either party has gone through its either accumulation or distribution phase, or some other external factor. For example, something happens with more of the altcoins, right? Like more money moves to altcoins. That itself might cause some price action in the Bitcoin world, or vice versa, right? Like again, people start moving money out of altcoins and say, well, let's go and double down on Bitcoin, or something else happens externally to just the crypto ecosystem completely, and that ends up impacting it in a big way. So something like that, yeah, could happen. Now, I must mention that there's another one that I really like in a very different sort of vector, and which is really the timeline view. I don't know if you've seen that, have you? So
no, I haven't.
So these guys added, I really like TradingView. I think they keep coming up with newer features, and they more recently added what is called a timeline view. So what timeline view does is it really puts all the news and the other kinds of action in the context of price action. So if you look at this BTC price and you stick in this timeline view, let's let it paint. It's kind of fun to look at it. Here you go. So this starts saying, hey, what did other people say and what happened to the price? So, it's kind of funny, but it's really good and it's kind of relevant. So, it says, hey, there's like New Year, price went up, and then something the regulator said, and, the price kind of jittered a little bit. Then there was the Musk effect. Elon Musk tweeted, the price went up again, right? And then it goes back and says, well, right now Tesla said you can buy cars with it, and how did it react, and so on and so forth. So this is like a fun sort of graphical representation of the history of Bitcoin versus all these other things that happen in the market. So it's kind of cool.
Nice. And yeah, I wonder whether the Coinbase IPO will get a mention on that timeline, or if it doesn't have such a big impact, then maybe it won't.
Yeah, that's a good one. Let's see. We'll get to know within a day or two, but yeah, that's a valid one. And they do this for everything, by the way. Like, so, we aren't covering ETH today, but if you went to ETH USD, you'll see a similar sort of a chart with ETH also. Actually, ETH doesn't have a timeline, so pardon me. Maybe they don't have it for all of them. But they do have for some stocks as well. That's what I had noticed, and I realized they do have for BTC as well. So it's interesting. It's perhaps hand curated, right? Somebody's like looking at this, making a judgment call, and then hand curating it to create this timeline with the external things that are happening. So, but it's good to see, because in the world of crypto, it does matter. Some of these things do impact, right? A mention here or a tweet there, or of course a big IPO or something else would certainly have impact on the price of Bitcoin. So for sure.
Great. Well, thanks again for running us through there. I definitely learned a lot from both the valuation models and then looking at those indicators again. So yeah, I think it's really exciting, and we'll definitely be keeping an eye on the majors as well as the alts and seeing how that plays out.
Certainly, yeah. I think the next edition we can pick up a lot more of the alts. There's so much going on in the alts. So yeah, for the listeners, it's coming soon. The weekend is not that far, and we'll record the next one. And then I think we should be able to study some of this in some more level of depth.
Excellent. Well, yeah, let's wrap it up there for today's session. But yeah, everyone, if this is the first time watching us with Going Elliptic, do remember to subscribe and follow us on Twitter and the newsletter, just to make sure you'll be in time for the next one. And yeah, very much looking forward to it. And this was Going Elliptic, charted for 15th of April.
Perfect. And thank you for joining. And do give us feedback. Like, subscribe, and let us know whatever you liked.
Perfect.
Thanks, Paul.
Cheers, Frankie. See ya.